Asalam-o-Alikum and welcome back. So in this lecture we will start with the theory of the mercantilism. So what is mercantilism is Adam Smith coined the term mercantile system to describe the system of political economy that sought to enrich the country by restraining imports and encouraging exports. So this system dominated Western European economic thought and policies, including Portugal, France, Spain, and Great Britain from the 16th to the late 18th century. Jean-Baptiste Colbert's work in the 17th century France exemplified classical mercantilism. So, in the English speaking world, its ideas were criticized by Adam Smith with the publication of The Wealth of Nations in 1776. Later, David Ricardo also criticized with his explanation of comparative advantage theory. So 18th century success secret, or we can say the formula, is more land plus more trade plus more gold. At that time they use gold and silver. So a person or any country who have more land, more trade and more gold is equal to more wealth and more power. This is the formula of the mercantiles. Mercantilism in terms of trading. This approach assumes the wealth of a nation depends primarily on the possessions of precious metals such as gold and silver. During 16th to 18th century, gold and silver were the currency of trade between countries. So by exporting goods, countries could earn and therefore maximize the amount of gold and silver. Conversely, importing goods from other countries resulting in an outflow of gold and silver to those countries. As nowadays most of the countries are the trading currencies dollar. So at 16th or the 18th century, they use gold and silver. Feature of mercantilist economy: import prohibition of certain goods, used imposition of high tariffs, government legislation, or very high taxes, or we can say import duties. Import duties are the taxes which are imposed on the goods. A wide range of government subsidies on export industries to promote the country's export-based policy. Policies of nationalism, and the last one is accumulation of assets in gold and silver. They accumulate more gold and more silver, and prohibition of private accumulation, use or export of these items. So one-way trade with colonies and importation of gold and raw material from these sources. Mercantilist policies have included forbidding trade to be carried in foreign ships, exports subsidies. The third one is banning all export of gold and silver. The fourth one is promoting manufacturing with research or direct subsidies. The fifth one is limiting wages. The sixth one is maximizing the use of domestic resources. And the last one is high tariffs, especially on manufactured goods, exclusive trade with. colonies have favorable trade balance. The economy of the colonies is always secondary to the economy of the mother country. So the colonies should provide cheap raw material to the mother country and market the manufactured good to the mother countries. In return, the mother country provide military security and political administration to the colonies. The overriding goal is national monopoly, meaning that nations' colonies should be restricted to trading only with each other or with the mother. So, what is modern mercantilism? In the modern world, mercantilism is sometimes associated with policies such as undervaluation of currency. For example, government buying foreign currency assets to keep the exchange rate undervalued and make export more competitive. And government subsidy of industry for unfair advantage. China has been accused of offering too much subsidized investment for industry, leading to oversupply of industries such as steel, meaning other countries struggle to compete. So, surge of protectionist sentiment, for example, tariff on import.